Alrighty, welcome to the Dower on today of 10/4. I have a few things I wanted to mention. We will be having Ditchy come on in a bit, and there are some. There's one active forum happening right now, the Gotchi Strategy forum, and I can link that right now. And I am going to summarize that a little bit because it's been a little bit of a hot topic going on. There it is, linked in the chat. So basically, TokenWorks developed a mechanic called NFT strategy, where a portion of NFT trading fees goes to buying back the floor of said NFTs. This idea, the idea of partnering with them was suggested by Bingo Bongo and supported by other community members, including 623.eth, crypt_den, Fifu, and others. No Future linked posts on X about an exploit happening with the Squiggle strategy contract and a bug being found. That same day, TokenWorks gave an update about fixing the issue by adding a, quote, call option for exploited NFTs. I'm personally not sure entirely what that means, but here is that post. I can link that in the chat right now.
I think what happened with their hack, or not really a hack, but there was just like some way that you could exchange it, the same, like in the same contract, you could exchange your NFT for a lower value NFT within that strategy contract.
Yeah.
So I think it happened with one of them where they exchanged it for like somehow a whole different class of NFTs got in the strategy somehow, and someone was able to buy it.
Yeah, I guess it was like two similar NFTs on the same contract being swapped or something from what I read. But yeah, and then they were creating the solution was
Yeah.
was in that link. The call option where you can unlock the ETH that was in the exploited NFT by selling it again or something like that. But yeah. And in the TLDR of that post, he wrote that all the future strategies that get released are going to be protected and more safe than that. So that's good to hear, at least. And right now, there are currently, at the time of writing, at when I was writing the agenda, there were 8 strategies listed on their site. There are still only 8. Here's their site, by the way, with all the strategies that are on it right now. And it's not really a lot yet. And they all seem to be doing well. When I was looking at it the other day, they were ranging from a 7 to 49% increase in value, and with a combined daily trading volume of nearly $11 million. Let's see if we go in there now. Oh, now it passed 11 million. Now it's 11.04 million trading volume. And looks like Dick's strategy went up 96.9%. Is the performance now.
Also,
Oh,
the
wow.
Moonbird strategy pumped.
Yeah, some of them are like 88 and 77%. Squiggle strategy was only at 7%. Now they're at 35% increase. So it's booming right now. And when I was writing the agenda the other day, like I think I wrote this on Thursday, but they had between 16 to 17,000 followers on X, TokenWorks did, and now if you look at 17.8 thousand. So it seems like it's going up really quickly, but it seems still early and there's a lot of time for them to get a lot more audience. So yeah. Now the question is, how much do we as Aavegotchi support this idea, and should we reach out to the founder of TokenWorks, Adam? And I would love to hear some opinions about that.
So I'll jump in. I like the idea. There is an issue that I saw. It was on the timeline yesterday, where part of this strategy is that there's a tax on the token, and the tax on the token is what fuels buying the assets, and then basically relisting them at a higher price, and then they sell and they burn and buy a token. The whole flywheel. Currently, there are pools set up that are taking like 70 to 90% of the daily volume from some of these tokens that are tax free. So they are sidestepping the flywheel by using pools that are avoiding the tax. Now people question whether that can be enforced, like questions of decentralization, like stopping people from being able to trade or create pools for these. So we would have to think of, if we did set this up, how do we avoid that issue of people trying to, because they will always do this, try to avoid the tax. Because I believe for most of these, like I think Punk strategy, the tax is 10%. So every transaction, there's a little tax tapped on top of it. If people are sidestepping that, it could undermine the whole mechanism that we're trying to set up for gotchis.
Oh yeah, that's interesting. That's a good thing to point out.
Yeah, and then what Coder Dan is saying is very true because they were talking. Who was it? They're rec strategies or rec guys, the guys who do the rec drinks. They were asked if they would do a strategy, and they said no. We're in our lane. We're building what we're building. If we do this, we add another token that now people become beholden to. Like now the owners have to deal with that. Where
Yeah.
if you have a token in your ecosystem, there is like a level of dilution that you're doing because now it's instead of people trading Ghost, they want to trade gotchi strategy or whatever, and that could be cool in the short run, but if this like all fizzles out pretty quickly, that could severely harm Ghost in the long term, potentially.
Yeah, I think it's like I would love to be part of the hype right now, but not just I'm not totally sure it's a perfect fit for our ecosystem since we started out with a token. The only project that has a token I think of the ape strategy so far is Pudgy, and I mean I guess ape has ape token as well. So yeah, that's maybe two, and like the market caps are dramatically lower for the strategy compared to that of the actual token. So it's like if we were to do it, I mean, disregarding there's probably gonna like if we reached out to the Rhinotic Atom guy and we're like, hey, we want to be part of this. My guess is he's gonna say, okay, like how much capital do you guys want to contribute to this? If he, if we even got a response, I'm pretty sure they're going to expect some form of upfront capital allocation to do buys and stuff. Like I don't see them putting capital up themselves. So it's either like people might speculate on it outside of Gotchi Gang. I mean, there will for to some extent, but the majority of the hype would still be coming from our community.
Yeah, see, if this was like DAO owned and it's a token for the DAO, I think it could stand alone on its own. And then like potentially the DAO is now farming the OpenSea airdrop, which is a whole other thing, then I think, not ideal. I mean, it could be cool, but it's beyond the scope of what the DAO currently does. Um, Yeah, I wonder, like, because our assets are relatively cheap compared to like a CryptoPunk. So, will this strategy end up owning like 10, 20% of the supply? The CryptoPunk, the Punk strategy, I believe with the acquisitions that it did yesterday, it's now a top 50 holder. And like the dystopian, kind of version of this is that it ends up owning like a large majority of the punks eventually. I don't know if that's like a realistic thing, but with our floor price, like I would imagine like even if we put like 10K into this, regardless of whatever the fee is that they charge, we'll end up buying a lot of gotchis and moving the floor price up. Will that mean that other people in the ecosystem will come in, outside of our ecosystem and start buying gotchis? Does it get more eyes on the ecosystem and the games in general? It's hard to say.
The only eyes we'll get was people saying, "Oh, like Gotchi launched on NFT strategy," and it's like pretty short
GMG.
lived.
We would probably get
GM,
the
everyone.
audience that would GM DG we would probably get the audience that is already trading on the NFT strategy site, that's already trading on the current 8 strategies that are there. Because, you know, there's the browse feature, and then you can see, you know, hey, I traded punk strategy. Maybe I could buy, you know, maybe a burb strategy, and that could, you know, do something as well, because it's all in kind of like it's like its own ecosystem. So if we joined that, we would get the audience of that ecosystem, I would assume.
See, I don't mind that, especially if this is a thing that like degens are going to trade and the DAO can receive a part of the revenue from fees, that could be a net good. Like the DAO could be revenue generating if this thing like, you know, in the trend and you know, there's millions and millions of dollars traded, you know, even a small percentage will bring money back to the DAO. But if it's a flash in the pan, which a lot of people worry that it is, then this could just be, you know, I don't know if it does brand damage necessarily, but it could just be a waste of time if this little thing like, you know, blows up. But if we are going into an NFT season, this could be very beneficial.
Well, one more piece to consider in a strategy like this is you got to look at both the supply and the demand side of the equation. If we're artificially pumping the value of our tokens and our NFTs, that doesn't necessarily increase the demand. So we could have Ghost go to $100, but if it's an illiquid market and we have nobody to sell our assets to, it really doesn't matter um, for our assets. I mean, you can always unload Ghost and make a profit. I think the more natural approach would be creating more user demand because as we bring more users on board, it's naturally going to drive up the demand. And we still have a scarce asset that's not increasing at this time. So that will have a better impact on our asset prices and our ability to move them in the market.
You see, I would also love to see like the strategy approach is the tax and the you know the sales basically help them buy more token and burn, if I'm not mistaken, instead of using the full fee to buy and burn whatever the gotchi strategy token. We should be using part of that to buy and burn gotchis. So this flywheel is also decreasing supply of gotchis while also causing this little mechanism of relisting and selling and causing you know whatever with the token. If we add like a burn component to lower the supply of the gotchis, this could get interesting. I know that doesn't really vibe well with what Pixelcraft is going for, because the idea is that you want more assets so more people can play these games. But as the assets become less relevant in the games, it might be a good way to cause some deflation while also tapping into this meta that might only be short lived.
I got you. Do we have an overall investing strategy for the treasury to consider, different risk tiers, like our degen tier, our moderate tier, our holding tier, or are we just talking about, hey, here's an idea and let's figure out how much money to throw at it?
Well, see, this is someone Bing Bong who's not here or not up on stage. Like brought this up in the forum post. We're just like discussing it and seeing if there's like that temp check. Does the DAO want to pursue? I guess the next step is further research to figure out what the costs are, and then if the DAO does want to do this, then you know I guess Bing Bong will create a proposal laying out all the stuff that we need. Um, yeah, pretty much. I don't think that there's because the Treasury doesn't have any level of management beyond us all talking and voting on then what we should do.
Yeah, yeah. And does a strategy like this require active management? Especially if it's short-lived, we might need to be able to reverse our
I think
position
it's automated. Like
as
it's
soon.
going to we fund it. It's a smart contract in perpetuity unless something happens to the network or you know some contract is messed up. I guess it's going to just keep buying and relisting the gotchi. If I'm not Roxiano knows a lot more about this, so maybe she should answer in here because I don't want to mess up the specifics of like the mechanism.
I don't know like deeply. I did some research on it. Um but uh it's yeah, I don't know, it's hard to explain.
Yeah, from what I understand, it's an automated like a smart contract that will buy a, you know a punk at the floor, list it for 20% higher, and then it continues to buy as it will sell that punk, and then it's like also burning some of the token while also trying to buy more punk. So right now the punk, like I said, I think it owns Punk Strategy owns over 20 punks. So you all thought also we should consider the fact that like what's the value of 20 punks versus the market cap of Punk Strategy? I think Punk Strategy at 200 million, which is impressive, but the underlying assets it's holding is, 1/10, maybe way less than that. So is this like another AI agents bubble that we're about to, we're just very early in and we're about to see um, kind of unfold in the next couple months, or is this sustainable, like actual thing?
Mini money.
Yeah, it seems it's a machine that keeps going. And but it depends on the trading fees that it depends on how much it's traded and what our trading volume becomes because it uses those trading fees generated by the token to buy the and list the floor NFTs. So we would need to have a lot of trading going on for it to continue to be working, or at least some trading.
Would the DAO have to own gotchis in order for this strategy to work?
Yeah, that's
Well, the
a part
contract
that
on them.
I sorry. Um
The
sorry, I was
contract would
just
own them. So we basically would fund the strategy, and then the strategy is just kind of like, from what I understand, it's just gonna do its thing. We don't actually have to intervene and do anything. It's just gonna keep doing the mechanism. And the idea is that as more gotchis get sold, the price of the or as gotchi prices go up, more gotchis are sold and more what's it called? The token is also being traded at the same time, so you're getting that tax, which is sponsoring buying more gotchis, which is raising the gotchi floor price, and then we see what happens with the price of the token. Now, I will say there was like from Punk Strategy, there was one investor who had like dropped $17,000 when it first launched. I think it was a sniper. He when it was approaching like 160 million, if I'm not mistaken, this guy sold, bought a punk from Punk Strategy, and then when it pumped, dumped at the top and sent the chart down like 20-30%. I forget the exact number, but there was like a level of manipulation. Now it bounced back and kept going, but people did notice that and were like, all right, we got to be kind of paying attention to this stuff like that, because he was able to like make something like 1,000 ETH or some crazy amount of, maybe not that much, but like a lot of money off of that trade. And some people saw it like sort of as a manipulation.
yeah, but then how would you prevent something like that?
You really can't, that I know of. Like that's why the issue of the tax is the bigger issue. Because even if you have the flywheel working, if people decide to go around it to avoid paying the tax, it kind of shuts down the whole thing. Because I'm not shuts it down, because some people will still pay the tax, but then the flywheel is getting so much less of the volume. I think people can't hear us.
That's, yeah, there's a couple that have said they can't. Discord's always kind of weird.
Oh, it's working
If you
fine for
can't
me.
hear, just watch the stream.
Yeah, I can hear
Loud
too,
and
but
clear
I'm
here.
yeah. So I think obviously it would be good if we had Bing on here.
The whole thing is very, it gives me like, oh, you guys hear me?
Yeah, go.
Yep.
Yes.
Just it gives me friend pet vibes of like the highly reflexive, uh, not in like the Tamagotchi sense, but just the way that the reflexivity of the market and all the trading feeds into the purchasing. The moment that trading like stops, or as people are already finding ways to trade on other platforms, the wind behind the sails just gets sapped, and stuff just like people just start exiting really quickly. Yeah,
Yeah, it
it's a really
reminds me
cool
of
idea when it
the
works.
reminds me of the summer of farms where guaranteed Ponzi scheme. And if you want to play the DGen game, you just got to get out at the top of the market. But money would go in, it'd come out, and then it'd jump, it'd bridge to another chain and go after the next high gains.
It's like that addicted game that's on Solana, which is like a weed farming game. And it's like it's clearly a Ponzi, but
Mhm.
everybody's still rushing at it. And it's like we could be a little bit more thoughtful because if this meta is going to burn out very quickly, you know, do we want to waste time and energy potentially on it, or do we think this has some legs? We have to do a little more research overall, I think.
Yeah, I think it would be cool as a more passive feature rather than something we would need to keep paying into and keep maintaining or partnering with someone for. Like if it was just a feature where like automatically like there was something that, you know, bought the floor and listed that and more fees came to that, that would be kind of cool. And we wouldn't even really need to have consistent trading for it to just kind of work when it works. But at what cost, you
From
know?
from a financial strategy and risk perspective, I would say if it's a new strategy and it's highly risky, like I'd consider that a degen investment. And if it's the kind of thing we need constant eyes on to make sure we don't get rugged, then having a small task force that's able to make changes to the investment quickly would make sense. Otherwise, I'd say we wait until it's a mature market that's worked out all of its bugs and exploits, and then and then go in on a more passive investment down the road.
Yeah, I'm totally with you guys. We could wait it out and see how long if the trend fizzles out and stuff.
Yeah, I mean, we could also just simplify the heck out of this and just vote on a buyback of gotchis via the DAO since we did buy, buy all that ghost at the bottom. I don't like, I
Mhm.
know people can front run it, but if we ever wanted to do that, I think that as a marketing gesture too would be huge. Like, hey, we're going to go buy back 10,000 of ghost and kill all these gotchis because we want a lower supply. We as a DAO, blah, blah, blah. That would be almost in a similar vein. No fees involved, but way less management. And yeah, I don't see that as like I mean, it's a short term move, but it's not similar to like just jumping on the newest wave of things because we have like, as a DAO, I feel like we definitely at some point need to talk about the fact that at least in the US, the rules have changed and revenue share
Yeah.
distribution, those aren't bad words anymore. And we like there's utility that can be offered by projects now, especially ones with treasury that could make these assets a lot more valuable because we can do things that we couldn't do before. Of course, we do research and, do all that stuff, but it's just it's exciting to think that we have a lot more options what we can do with our treasury without getting run over by the US government at least.
Mhm. Just
Having said that,
um,
I'm 100%. I'm so against buybacks with the current treasury. I mean, we wasted a lot of the DAO treasury on just buying back Ghost. It doesn't really do anything. We just accumulated Ghost. But buybacks need revenue. If you don't have revenue, you shouldn't be doing buybacks. Like there's no reason to do a buyback without revenue. It only works if you have revenue. If you're just using your treasury's assets to buy back the native token, like that's not sustainable, and people in the market see that. They get excited because there's revenue generating protocols like Aave or like Fluid. I don't know, maybe they're doing it, Lido, whatever. Like these bigger protocols that actually have real on-chain revenue, funneling back that revenue to the token holders via buyback and burn or some other mechanics. But they're not. You don't see anyone out there just taking their treasury, buying back their token with it, and then like burning the token. That's literally just setting money on fire. We did it because like to fund more rarity farming seasons, but honestly, I mean, I was against it then. I'm still against it now. I don't think we should be doing any form of buybacks with our treasury until there's actually sustainable revenue coming in.
so
Yeah, I
let's,
think that's fair.
I'm going to piggyback on that comment there. I 100% agree because a buyback of the token is similar to buying back ownership of a company in the traditional world. buying back shares or
Mhm.
stocks, um, and without revenue generation. I mean, cash is king when you're running a business. And so without revenue generation, sitting on a whole bunch of equity doesn't do much good. Um, but any of these moves that we want to engage in the future should be part of a strategy, not just a single action that we take. 100% Thrax. Buyback with no plan behind it is just a bleed. So when I say a strategy, I'll use a programming analogy since a lot of people here will understand it. Um, think of the financial strategies of the Treasury and the DAO as full stack development. So if we're making a play on the back end development that we're going to buy or sell a token, well, we need the front end, which will be onboarding new players. We need the middle range of that development stack to be cultivating the relationships with those new users so that they want to get into and stay in our flywheel. And then the back end development would be whatever financial strategies help bolster that relationship, that onboarding, and that kind of um, system level strategy is what's going to organically raise asset prices through through the demand side, people coming in and wanting to buy the asset because there's a purpose for it, be that to play a game, be that to join a community, be that because there's an educational component to it or a networking component to it. There's some kind of function and value to being in our ecosystem.
Yeah. I would say like the majority of projects that we see on the timeline are just flash in the pan, and they generally either just fizzle out almost immediately or they rug. And so like they're not interested in, they don't have that aim of actually creating like a sustainable ecosystem that actually can live on through multiple cycles. So what we see a lot of projects out there doing isn't necessarily like the right way to do a long-term project.
Mm-mm. The right way to do a long-term project is to have a game plan, a roadmap, and a strategy for where the entire project wants to end up. And then anytime a topic comes up, like should we invest in that, buy this, buy that, market here or there, you can go back to the original strategy and go, does it fit our roadmap? Does it move us towards that goal, or is it a distraction from that goal? And that makes it really simple to answer what new opportunities we want to jump into.
Yeah, definitely.
So that right there is a perfect segue into DAO matters and some of the stuff that I've been working on in the background. I'd be happy to bring to light to the community here. Um,
By
what
all
I've
means.
what I've been thinking about. Well, thank you. Something that I'd like to do moving forward is during the DAO calls. I want to lay out a little bit of education on what it is that I'm working on, so that everybody has a little bit better understanding of legal structures and business and compliance and how all of this works. So it isn't just Ditchy is lecturing everybody on an idea and people are just nodding, going, "Oh, sounds good, sounds bad. I don't really understand." Um, but I don't want to overwhelm. So just a little bit of education on the front end, followed by questions and polling. We're never going to be able to start building a new governance structure until we get an idea of how we want certain things to work. So questions will be along the lines of, okay, what level of decision do we consider critical? What level of decision do we consider lightweight and passive? And tied to those tiers will help guide us in how many people need to be involved in a decision making process for that tier. Does that make sense?
Yeah.
Yeah, I think a lot of DAOs are structured in that way.
Mhm. And this is the hybridization model that I discussed on the last call. A lot of DAOs are moving into this DAO 3.0 model, which is a hybrid where major decisions that affect the entire ecosystem are made by a full vote of all of the DAO members, whereas daily operations and movements of money in and out of risky contracts, for example, would have a task force assigned to it so that they can move quickly, and they would be pre-approved without authority and pre-approved with a fixed budget to work with. So if we find that that particular farm is about to get rugged, we don't have to go to a full vote to take the money back out of it. All right, so on the education front, the topic I wanted to cover today is the idea of the corporate veil. You may or may not have heard of this terminology, but this is universal in all business applications. And the idea works like this. Each one of us individually is a human being. And the legal structure in most common law states, well, most legal structures everywhere, apply to non-human things rather than the human being itself. Now we're talking about corporate law, not criminal law. So the law that applies in the corporate world applies to a dead thing, not a living thing. That's why a corporation is called that. It's from the root word core, corpse, or body. So the law applies to the corporation that wraps around the living entity, the living person. And so the corporate veil is this idea that once you create that corporation, that LLC, or any other kind of entity like a foundation, it's meant to provide a limited liability protection for the living person and what they own. So if a lawsuit comes your way and you have all of your assets like your house, your car, your 401k personally owned, if you are personally sued, then all of those assets are up for grabs in the lawsuit. Now, if your company owns those assets, your car, your investment fund, your crypto portfolio, if that's all owned by your LLC or your company, and somebody sues you personally, they can't touch what's in the company. If they sue what's in the company, they can't touch you personally. You see the distinction here? Now, the corporate veil applies to how you protect the assets once you put them inside your company. If you put your assets inside your company, but then you transact on behalf of the company in your personal name, you've just pierced the corporate veil and opened the floodgates to personal liability. So let's use a case study. The Treasury in name belongs to the foundation, not the collection of voters in the DAO. We don't have it quite structured that way, but that's the general concept, and that's how our foundation constitution is written. So if the foundation company owns the Treasury and somebody transacts with the Treasury and signs as the foundation, then the legal protection, the liability, the corporate shield is intact. If somebody goes and signs a Treasury transaction in their own avatar or in their own person, they've just pierced the corporate veil, and that liability now spills over to them personally. All right, does that make sense?
Yeah.
Okay. So once you set up your legal protection entity, whatever it may be, everything that the company needs to do, which would be bank accounts, legal contracts, crypto treasuries, NFT holdings, anything of this nature, needs to be owned by the company and always signed by the company. So if we would never, none of us would sign a personal check on behalf of the foundation because that opens us up personally. We would always sign the foundation's checkbook, as an example. So we do have a foundation, and it is capable of doing this, but it does not currently wrap us individually for liability protection. It only wraps the transactions that we claim that the foundation did. So that would be if the collective of the DAO makes a vote, and then we report it as owned by the foundation and executed by the foundation, then in a legal sense, the foundation made the vote, and none of us are personally liable. So to piggyback on that educational piece, we get to the topic of liability wrappers, right? And a wrapper simply means some kind of corporate entity that wraps liability protection around us individually. And so there are multiple different ways of doing this. I'm not going to get too far into the weeds about which one is going to be the right solution for us. There's a lot of questions and polling that needs to happen before we can choose a solution. But the way a lot of DAOs are moving in this new space is to have at least two entities: the foundation, which is your public facing entity, and then some kind of internal LLC, which is your interior facing entity. So let's say we take a company, let's just use a simple limited liability company, LLC. We put that, we set one up, and we define that as the legal body for the DAO itself. Now, all of the members of the DAO end up becoming members of the LLC. And now, anytime we pass a vote, we declare that the LLC executed that decision on behalf of the DAO. And now we have, all of us individually have liability protection wrapped around us for those decisions. The foundation, as the public facing entity, is the one that's in a position to transact with people and companies outside of the DAO. So the Interior LLC would handle our daily operations and our votes. Our foundation would handle transactions with other parties, contracts between the foundation's treasury and developers. So next time we have a proposal for funding game development in the gotchi space, we would have a legal contract between the foundation and the company that wants to build that game. And by doing that, we now have a well documented case of who's going to do what, when, the deliverables, the consequences for non-performance, when the money will be transferred, what has to happen before the money is transferred. All of these things get documented out. So there's never again a matter of he said, she said. It's simply, let's go back to the documents. This is what we agreed to. Here's where we signed on the dotted line. And I, for one, would insist that any member of the Gotchi gang that wants to transact with the Treasury to build a game, for example, set up an LLC for yourself. Get a company set up. Transact through your company to the DAO, not personally with the DAO. It gives you an additional level of liability protection, and not to mention all the tax benefits you get for handling your revenue through a company rather than through a W-2.
Okay, but say you have like a sole proprietorship and then you make a proposal that passes with the DAO, um but then like the DAO as a whole gets sued or something, but you're kind of just like partnered with the DAO. You're still not completely directly affected.
Are we talking about in terms of voting on proposals?
Yeah, like in terms of like maybe the DAO funds a project by someone who has like a sole proprietorship, who would be liable for their own company if they were directly sued.
Okay, so the difference between a legal entity and a sole proprietorship is this. A sole proprietorship allows you to run revenue through a company, declare your deductions, and then tell the government how much you owe them in taxes at the end of the year. versus operating in your own person where your W-2 has tax deductions. You give a tax-free loan to the government for the whole year, and then you have to go to them and justify why they should give you your money back. So sole proprietorship is really just giving you the benefits of accounting for your own money and tax deductions. You do not have limited liability protection through that until you create an entity like an LLC and wrap that around your company. So
Right.
as we're structured right now, if somebody were to sue the DAO, air quotes, there is no such thing other than in name only. You can't sue the DAO because it isn't a legal entity. You can only sue the individual members of the DAO.
Wait, wouldn't you be able to sue the foundation in its current form?
You could, but you're not going to get anywhere because the foundation hasn't made any decisions. It's not liable for anything. And keep in mind also that you have to be able to you have to in any lawsuit you're going to have to show loss or damages. So and that usually starts with financial damages and then goes into other things like more well, I won't go too far down the rabbit hole. So you could, yeah, you could sue the foundation as it currently stands, but you're not going to get anywhere because it hasn't done anything that made it liable.
Losses would be like if someone felt that they lost money on a ghost token or something, and if they tried to sue the DAO or an NFT sale or something, you could. I mean,
Hmm.
losses. Anyone can try to think that they have losses, right? If they wanted to sue the Aavegotchi as a project, they would go to the either Pixelcraft or the DAO Foundation.
Yeah, Tao Foundation would be a dead end because it hasn't executed any transactions that would make it liable. If you go after the DAO, you would have to name the individual members and drag each and every one of them into court, um, which includes trying to figure out who they are behind their avatars. Um, very, very expensive proposition to do that.
Yeah. For
And then on the
individuals, I think it was more about the government and like, I mean, obviously the climate has shifted a lot for the better. So not as bad as it was back in 2022, 23. It was like pretty scary. So things have definitely thawed out quite a bit in terms of that. But I think the main like lawsuit potentially could have been like an SEC or something like that. And they were actually going after DAOs. They were at least trying to.
And they would have named us all individually in that. So, loss of funds as your claim for damages is a little tricky because there's none of us signed a contract or an agreement or a user license saying this is what the project is going to deliver to us. We had a light paper, we had a white paper, we had a roadmap, and then we took our own individual risks putting our money into the project. And if it didn't deliver on promises, well, there was no contract saying these will be delivered. So I'm hoping that gives a little bit of clarity to the concept of legal structuring and entity wrappers and why we're having these discussions in the first place about doing some restructuring to the way our DAO is legally set up. The flip side of that coin is the questions about how the DAO will be governed going forward. Because as of right now, we've already discussed at length what the shortcomings are of having a purely democratic system running the executive decisions of a for-profit company. And there's a lot of challenges there. It's very slow. Nothing can operate in stealth. Everything gets broadcast to the open market. And anytime we try and do a transaction like buying or selling our ghost, we're broadcasting months in advance to the rest of the market which way we're going to be moving. And anybody listening in on these calls or hearing a recording or being told through a private chat of these recordings can go into the market and bet against our position. Yeah, exactly, Nestor. So there are a number of activities within a company that have to be done in stealth mode, and that can only be done with councils that are pre-approved to do certain things with a certain budget. So that leads into the questions I wanted to start asking if all of the members who are participating here about um, tiers of intensity. Intensity of decisions would be another way to put it. Um, so we know that our voting structure right now is to pass a sig prop, you need a 20% quorum. We look back to the original white paper and to the Aavegotchi governance on the website. It says that once we reach a core prop, the, there are tiers of quorum that must be met dependent on how big the decision is going to be made. And it's, I believe it's 10, 15, and 20%. So the 20% only applies when we're going to be deploying a sizable amount of money. But a 10% quorum is for things like, hey, change the title of let's change the title in Discord of what this role has. Let's change something in the Gotchi verse, and let's get an honorarium to hardcore and get the ghost ship into the Gotchi verse. If that were a DAO decision in the first place, we would only need a 10% quorum to pass that kind of vote, right? Minor decision, no money deployed. So on the same note, let's start looking at what are the tiers of decisions that we would like to be making within our system, so that we can start discussing what type of councils would be responsible for those decisions. And I would open up the question to the entire floor. What do we consider to be a major decision in the DAO? Feel free to answer in the chat.
Thing from my just top of my head, I'm gonna have to sign off here soon, but changes to tokenomics, changes to anything related to collectability of the NFTs that might affect the asset prices are all kind of top of mind uh, for what the DAO was created to work with.
Yeah, so in our current structure, those would be like proposals for everyone to vote on. What would it look like as a process in the new structure, do you think, Digi?
Too soon to start discussing how the process would work until we have a really clear picture of some answers to some of these questions. It could go 20 different ways, honestly.
If we create an LLC for the DAO, would everyone have to have like some sort of responsibility for the LLC? Like, would there have to be a task force for the LLC, or would it just be like like we could say legally, oh, this is an LLC now?
The LLC would be fairly simple in comparison to everything else. We'd set it up. There would be a task force that runs the executive decisions of that. And for an inside-facing company, it's really going to be no more than annual reporting, tax reporting, and an occasional flip of the switch. For the most part, it's going to be, because we're not putting assets inside of the LLC, we're putting the members inside of the LLC.
So everyone would be part of the LLC, correct? Everyone who holds
Everybody,
assets.
everybody who has voting power would be a member of the LLC. All right, less major votes. We're looking at additions and changes to game mechanics. Minor votes will be creating committees, certain funding proposals. All right. Does anybody have any suggestions for an additional tier beyond major, minor, and middle?
While we're waiting for that, but Ditchy, have you followed this guy at all? He's pretty prolific on X. His name is Back the Bunny. And the stuff that you're bringing here sounds a lot, or is starting to sound a lot like what he's working on at his consultancy. Basically, if you look at the website, a new standard for tokens. Salutary's North Star is aligning tokens with business fundamentals where genuine value creation drives rewards. I think his starting point was like crypto tokens aren't actually equity in the companies, but people kind of act like they are in a way. And a lot of the mechanics that are used, such as buyback and burn in crypto, are like very common in TradFi because they
Mhm.
actually have weight. That's where the name build for weight comes from. You'll see that the weight comes from the fact that if you eventually get enough of that token, or in TradFi the share, you can actually like take over the company.
Mhm.
But in crypto, we use the same mechanics, but we don't. The tokens don't actually have that uh, ability. Like you can't take over the whole company or the lab. For example, like a Uniswap, you can't take over Uniswap Labs by owning a lot of shares of the Uni token.
But you can in a traditionally structured DAO like ours. All you need is a 20% ownership share in the voting pool, and you can steer every decision in your favor.
Right. You own, I guess, yeah, he's saying I think his proposal is more radical, which would be that you would actually merge the labs and the foundation into a single company, and the token would be representative of actual equity in the company.
All right. Well, as soon as we start talking about equity in a company, we're immediately crossing the threshold into securities, and that's where the SEC would love to bust us. Um,
Yeah,
so
it's he's a
our token is not equity in the project.
what
I
you were saying there kind of reminded me of where he's going with this, which is an interesting direction. But yeah, uh,
I
he thinks that it's not a security. Maybe you might want to take a look at it. He's a pretty interesting guy.
I'll dig into that. Um, a token can be a security or it cannot be a security depending on what we use it for. Um, the number one way to decouple it from securities accusations is to remove all the voting power out of the token and into the assets. Once you do that, the token is guaranteed not a security. It's just a currency for operating in our ecosystem. But now you've got NFTs that are represented as securities, and so these are questions we kick back to the lawyer to make sure we stay on the right side of that fine line.
Yeah.
So, Coder Dan, you just brought up something interesting about merging the you used a different term, but I guess the dev studio, Pixelcraft,
The
merging the
labs,
dev
yeah.
studio.
People are calling it the labs and the foundation these days.
Okay. So you would be that would be merging the development studio with the DAO and bringing them all under the foundation's
Hmm.
roof.
Yeah, I think that's
Is
the direction that he is advocating for.
is that something you're in favor for?
Um, I'm pretty. I mean, I think there's a lot of ways we can improve our current structure before doing like a major overhaul in that way. Like you said, there's a lot of things to explore related to. I don't know if that's a leap that Jesse and I are like ready to make yet.
Hmm.
I think there'd be a lot
Okay,
of legal advice needed for something like that.
no doubt. All right. So getting back to the questions and answers, Nestor asks, what are examples of decisions that could be front run or have been front run in the past? These examples would serve for defining the high tier decision category. All right, so right off the top of my head, Nestor advocates for any open market transactions would qualify as a high tier decision category. And I agree wholeheartedly. Um, but let's look at a potential as a potential case study for that. Um, if it's a high tier case study, the DAO would vote for the DAO could vote for that at a high tier, say 20% quorum, but that doesn't mean the DAO has to make the decision of when, where, and how to do the market transactions. The DAO could do a high tier vote in order to create a task force for market transactions and to pre-approve a fixed budget and to pre-approve a risk tier that that task force is allowed to engage in. I'll throw some numbers against a bulletin board. None of this is final. None of it's meant to stick. It's just to help illustrate the point. Let's say we wanted to authorize $1 million of our treasury to go into outside investment activities. And we divvy it up into multiple risk tiers. Let's say we have a, hold and protect our money tier. We have a moderate growth tier, and we have a full-blown degen tier. And let's say we divide that $1 million, one third, one third, one third. So our low risk, hold and protect our money tier could be something as simple as let's buy some ETH and let's either stake it, create a node, or loan it out on Aave, something like that. The goal isn't growth. Aave is going to give us 2, maybe 4% return on lending it, but it's really all about holding the token and either having it stay stable or appreciate over time. So there's $33,333 or $333,333 over there. The second tier would be moderate risk. And in this case, we would be targeting a better return on investment, somewhere between, say, 7 to 10%, maybe a little higher. And we'd be willing to take on a little more risk to go after that growth. Now, in that tier, we definitely want the money to be collateralized. So if the deal goes wrong, we get to take possession of actual assets to compensate us for our risk. That can be on chain or off chain. Off chain, we could collateralize a deal and take ownership of real estate if the deal went south. On chain, we could collateralize against some CryptoPunks or NFTs. And if the deal goes south, well, the DAO just collected a whole bunch of assets as its compensation. Now, in the ultra high risk degen tier, we've got about $250,000 up there. That's where we would have a task force that is designed for high risk investment plays. And they could bring those plays to the DAO to say, hey, I'd like to put $10,000 into this strategy that was just suggested here. It's a bit of a gamble, but we're going to stay on top of it and monitor it in real time. And then we want to put another $20,000 over into this play. So the task force could get together in committee, choose the best opportunities that they want to go after, bring that back to the DAO for approval on the different plays. But then once that approval is granted and the budget is granted, that task force has full autonomy to make those buys and sells on the market. And now we've got stealth operations on our market trades. Waiting on Nestor's reply here.
Yeah, I guess
Hoping
my
I'm not
question
leaving
is,
anybody behind here.
yeah, my question is there any appetite from the DAO? Because it doesn't seem like, I want waiting to see what comments pop up, but I feel like I don't know if we like it makes sense for the DAO to start engaging in that level of trading. If we're managing DeFi, I guess it makes sense. We could set. I mean, I would not be opposed to exploratory, experimental like things where we, grant funding to certain subgroups to do certain things. We need the governance kind of like shucking out. My question is because you were mentioning like signing contracts and LLCs involved. Like for a person like me who's fully doxxed, I don't care about signing a contract with my name or with the LLC that represents me. But there are going to be other people here who wish to stay anonymous and not have to like essentially KYC to the DAO in order to build from them. People who have been trusted and within our community for years at this point. Would they be affected by this? Like, how would that work?
Hmm, that's a good question. All right. So once you create an LLC, remember it's not just about doxing, it's about liability of your personal assets. That's what an LLC is there to protect. So if you were to create an LLC for all of your business activities, your streaming, your NFT trading, all the asset holding that you do in your transactions, and you hand ownership of all of your NFTs, your crypto portfolio, and put all that inside your LLC. Now, if you were to personally wrong someone and get personally sued, there's nothing they can get out of you. And if your company personally wrongs someone and gets sued, you have a better layer of legal protection there. You can create a layer of anonymity through an LLC. It varies from region to region on how much you need to report. In the United States, you have to report to the Department of Treasury's Financial Anti-Money Laundering branch. That's what the whole BOI reporting is. And you have to report to the Secretary of State in whatever state you found your LLC in. Some states allow your info to be public record and searchable. Some of it is behind a paywall, and some of it they simply won't give away. And if you add a registered agent onto your company, now your name and address are not personally attached to the LLC. So let's take it back one step. Signing a legally binding contract between the foundation, which is funding your project, and you, the developer who wants to build the project, there does need to be a legally binding contract of some kind in that relationship. If you want to tie it to your person, then you are attaching liability to your personal assets. If you want to sign that as your LLC, you're protecting your personal assets.
Yeah, no, I mean I get all that. I'm asking specifically about like like developers that are in this community who are not currently doxed that would have to basically dox to a certain degree in order to sign these contracts if they're not using an LLC, which they probably should be. The other thing is we do currently have funded working groups that do work. The Gotchi Greeters is a sub DAO that has funding that acts autonomously. We don't have to check in with the DAO basically to do much. We do check in and say, hey, where we should go? Is anybody available to be there? Those kind of things. But we have our own autonomy in that sense. So maybe exploring setting up sub DAOs to fund certain specific things. Like if we want a degen trading sub DAO that we give annually a 20K budget, and then they can come up with a plan in terms of their compensation for their trading, and then like a plan in the actual trading, maybe push like what they expect to return to the DAO, and then it'd be a working group that's its own sub DAO with a multi sig that they can figure out. For the Gotcha Greeters, that's worked out pretty well. And we are like pretty much the only real entity within the Aavegotchi DAO as a sub DAO that actually has done IRL things like contracts within the real world. So I think it
Mhm.
can work. We still should work on the structure and it to protect ourselves in terms of the governance, but we might not need to like we could just form sub DAOs, fund those sub DAOs, and that's really the lower tier decision making, the middle to smaller tiers by granting these fundings to these sub DAOs.
I agree. SubDAO, committee, task force, I'm using those terms interchangeably. However, however we structure a subgroup to handle a specific task would be well defined, and depending on, well, it'd probably be a 20% quorum in the core prop in order to create that sub DAO, because you're creating a regular budget with it, and then giving them their marching order, so to speak. But yeah, I like that idea. I also like the idea of tying compensation to performance, because in the real world, if you give your money to a financial advisor or an investor, how do they charge you? They charge you per transaction. Every time they buy or sell a fund or a stock with your money, you get charged for it. They can lose all of your money and they're still making high six figures every year. But if we do a compensation plan that's more like, here's your base pay for taking on the activities and paying for your time, and your compensation is based on the performance of your investments, you get a percentage of of money go, or of price go up. But if you lose money on it, we're not going to kick too hard. We'll just not give you all that much money to play with if you're going to go deep. All right. Zybot says, we've got voting signed transactions so far for investing the treasury, buybacks of Ghost, protocol updates, game funding, and IRL events funding, tours. And all of those make perfect sense as a 20% quorum vote, because we're moving money and making major changes to what can affect the price and value of our assets. And Nestor says, a part of the ETH stack could be managed in this tier system. Yes, it could, because from what I've heard around the DAO, our holding of the ETH really is about the appreciation. That is that's our moonshot play in a lot of people's minds. So, but in the meantime, that's a preservation of wealth play. So it's put it in a vault and forget about it for a while, and we don't have to worry about that value being depleted.
Well, also remember that we are like near the all-time high, and I believe we have set some of the limit orders up, at least for the first tier of the ladder for sales. I have to check with Maxi, but I believe we did sign and set those limit orders. So, you know, this governance process, by the time we get there, if the market pumps, we might be all in USDC. You never know. Like if we get some rocket fuel. So just keep that in mind.
Mm-hmm. Yeah, no problem though. No problem on that market trade, because ETH has such a large user base that even if we say, hey, we're going to sell at this price point, that's not a transaction that's easily front run. Because who's going to go and drop $10 billion in funding on short plays on ETH just to to stick it to us? Final leg up is just warming up. The euphoric insanity is coming. There is 6 months left. All right, Nestor asks, yes, who do the sub-DAOs and task forces report to, the Foundation or the DAO? It depends on what they are doing. So in this new structure going forward, when we say DAO, we would be talking about the LLC that raises its hand and says, I made that vote. I made that executive decision on that snapshot. The foundation owns the treasury and would distribute funding and authority for individual sub-DAOs to make transactions. So anything that is public facing goes through the foundation. Anything that's internally facing goes through the LLC. And Zybot asks, but in crypto, all those are tracked by Uncle Sam Taxman. That's where it gets freaking tricky, man. Since the regulatory environment in the US has been so flip-floppy since I got in 2020, I just followed a simple rule of account for all of my transactions, all my gains and losses, you know, divide them between capital gains and functional operational revenue. And then when it comes tax time, I report it because I'm running it as a legitimate business. I bought Realms in the Gotchiverse because it was a perfect digital parallel to real world real estate investing. I bought land, I farm land, I pay somebody to work the land. All of that is operational income or losses. You flip gotchis. Oh, well, it may be capital gains. You'd have to ask your accountant about that. So I report all of my profits and losses in the gotchi space. Other people, if you don't know if you want to do it, I advise to at least track it and account for it. And then if Uncle Sam ever does come knocking on your door and saying, hey, you need to cough up, you've at least got your records when the audit comes. Yes, Nestor, the DAO would be an LLC or similar in the future. So anytime we say DAO, we're talking about the legal entity that wraps it.
So do you plan on creating a proposal to form an LLC in the future?
Not quite that simple. What I plan on doing is the foundation directors are working on a plan to get our legal representative retained. The legal rep is going to construct this new governance model based off of our feedback on how we want things to flow. So the more of these questions we can get answered here, the less money we have to throw at a lawyer to figure it out for us. If we know what tiers, what risk tiers we want what votes going towards, if we have an idea of how we want information to flow between different parties and entities, the more answers we have, the less we have to pay a lawyer to ask us those questions. So once the foundation directors get the legal rep retained, we throw a bunch of these answers at her. She will actually jump into one of our forums and help guide the discussion on how we're going to do the structuring. And then we are going to take that proposal to the DAO as a full-blown package. But along the way, I'm leaning on Thrax's recommendation from the PR standpoint that, well, we need to get the word out into the DAO at large through the whole process. The people that are in this call and show up to the forums are going to be the active contributors to how we're going to restructure, but we can use SIG props to just send information out into the void, because there are a lot of members of Gotchi Gang that don't get involved unless there's a vote happening. So we can send questions and polls and announcements out by SIG prop to get the word out to as many people as possible, and hopefully get some of them to come back and this way and join in the conversation with us.
Okay, sounds good. So as far as next steps, what do you need from us at the moment? Like the members here and whoever listens to this.
Let's see. I will do a recap of the major topics in this call and post it up into one of the DAO into the DAO forums, so that we can carry on the conversation there throughout the week leading up to next Saturday. Um, the only action item I have for the participants here is read through these documents. Here are a couple that come from DAObox talking about different ways of structuring DAOs and what the new standard is, just to kind of wrap your head around what this kind of governance would look like. I can only explain little pieces of it at a time on a 1 hour. So the more of this information we can all get into our heads, the more we can all be on the same page when we go forward.
All right, thank you. And that might be it unless anyone has any final thoughts or questions. That's a good neat wrapper to this conversation. It was very productive. I learned a lot. I'm sure a lot of people did too, and I'm looking forward to the decisions we all make. Legal wrapper. So anyways, yeah, I hope everyone has a great weekend. And peace.
Take it easy, friends.
Take it easy. Thank you again for hosting.
Of course. It is the duty.